Sylvia, is the Fed the most key thing for markets right now outside of, say, a COVID-19 vaccine?
Hi, Dom. Good morning. Great to see you. I would definitely agree that the Fed certainly has our back, and that has helped to support markets, and it's helped tech and some of these mega tech names to keep running. The Fed has kept rates low, which has made it possible for companies to survive a little bit longer. So I think that continued fiscal and monetary stimulus would be key to supporting this market rally.
What are you looking for? What will you be listening for out of Fed Chair Jay Powell today and all the other Fed speakers later on throughout the course of the week? What's the key in your mind for markets as we move into the kind of back half of this year?
I think there are two parts to this. I think the first will be how long the Fed intends to keep rates low. I think if rates stay where they are, that's a massive support to the markets, and it'll keep the markets going, probably keep momentum and the upside going in some of the broad-based indices as we're seeing all-time highs. The second point will be around inflation. Will they let the markets run a little bit hot, and to what degree? So those will really be the two keys. But I think what the markets want to hear is that the Fed is still not thinking about raising rates. That'll really be the key.
So there has been, first of all, I mean, there are folks who've been bearish ever since the past decade at this point now. But let's focus specifically on the last few months. It's been a fantastic move off the COVID-19 pandemic lows back in March, and it's still a skeptical amount of people out there who feel as though we're not deserved to be at this point right now. Is there a reason the markets are at record highs, and is it justified?
Well, it's really interesting if you take a look at the markets and sort of break it apart. Some of the names in the markets that are moving are really a small group. You've got these top 8 names moving, and it's really that the market is rewarding growth, mega cap tech types of names. So I think if you've been sitting on the sidelines for the last, let's say, decade, but particularly since COVID, you've missed out on a big run. If you look at some of the movements in the ETFs, I saw you put up semiconductors earlier, technology. We've seen the same thing on our side of direction. Just the tech ETFs, the work from home theme, anything that supports cloud, cybersecurity, online documentation, social interaction, telemedicine. These are the names that have really ripped. And the economy, some of the economic numbers are starting to look okay. Jobs numbers aren't so great. More than 10 million people unemployed doesn't sound very good. But growth in the consumer durables number was a little bit better. 14% increase in housing sales has really led, the Home Depots, the Lowe's, the Lennars of the world to grow. So I think that there have been really great bright spots in the market. And, for the investors sitting on the sidelines, they've certainly missed out on some of that. But I do think that the tailwinds in those sectors are probably still there.
We had a guest yesterday say that there's a lot of cash on the sidelines, and that could be the fuel for the next leg higher. I mentioned it because you just said there's this kind of like the people who've waited out are missing out on this whole thing. Do you think that they're scared enough to buy into a market at these elevated levels to keep this kind of rally going?
I think that there is a lot of trepidation going into the market at some of these all-time high multiples, all-time high levels. But what I would say to investors is there's still bright spots. There's still tech has run up high. If you're not comfortable buying Apple, Microsoft, Alphabet at these levels, well, maybe you're comfortable buying some of the work from home names and some of the connected consumer types of names like the Tals, the Learns, the Etsy's, the Twilios, the CrowdStrikes. I do think that there's going to be this sort of micro technology sector that flourishes from all of this, and the tailwinds for that are certainly there for the trend to continue upward. We've seen triple-digit performance in some of those names. Like look at Etsy performance year to date; it's just incredible. So I think looking at the connected consumer, work from home, cloud technologies, cybersecurity, all of those types of names are really interesting right now and worth looking at. Also, yield on corporate bonds is a couple percentage points. Apple free cash flow yield is 3%. The returns are still in equities right now, so you probably want to participate at least a little bit in that.